You have just heard what Mr. Bullard said. He always speaks his mind, and he said there he thinks maybe this, I guess, the equity markets, principally, are underpricing the idea that inflation may stay higher for longer. Do you agree?
Yeah, well, equity markets and fixed income markets, if you look at where the market is expecting the Fed funds rate to be, it's pricing in rate cuts in 2023, expecting probably the economy is in recession and the Fed will react to that. And I think that what we're hearing, and certainly what we heard from James Bullard, is that, this idea that inflation could well be more persistent, that I think the Fed is more fearful of rates having to stay higher for longer, maybe move higher from here. Even when he talked about the inflation outlook, talking about the inflation rate moving in the right direction, but by the Fed's own acknowledgement, not getting back to 2% through 2024. I mean, none of these things set the stage for a quick pivot toward easing that the market is priced in. And I think that that's something he's calling out here in those comments.
Yeah, and he is also one who, in that interview with Steve just moments ago, he said that his expectation for the end of year level for Fed funds is something like 3.75 to 4. That's a little higher than you have it.
Yeah, we expect the fund rate to get to 4% by the first part of 2023. So our forecasts are not dissimilar. I do think the question, and he referenced it as something the Fed will have to be thinking about going, at some future date. But I do think it will become the predominant question in 2023 is 4%, even as high as that sounds, is that going to be enough? Will it be sufficient to bring inflation all the way back down to 2%? How long will the Fed tolerate inflation being above 2%? I mean, as he talked about, that isn't something the Fed has to deal with today. But when I look ahead to 2023, that is going to have to be something the market is going to have to, I think, grapple with. Again, right now, the market is pricing in cuts. That may be called into question. And it could be worse if inflation is more persistent. It may be that the Fed, the markets start to fear the Fed is going to have to do even more in terms of hiking rates higher than 4%. In order to get inflation down to where the Fed is comfortable, where it should sit.